Great. Well, hello, everybody. Welcome to our session after lunch. For those wanting a quiet snooze in the background, the back row seats is the place to be. So I'm Alan Welby. I'm Managing Director for Built Environment, Local Growth and Connected Places Catapult. Really excited today to talk about investments in net zero. We've got a great panel here today. I'd just like Lolita and James to introduce themselves first, if that's okay. Just a little about yourself, about your background and your knowledge in this space. Then we'll go a little bit more in depth with Susan and Mete, if that's okay. So Lolita, to you.
Sure. Hello, everyone. You hear the accent. I am American, but my company is located right here in London off of Piccadilly. I work for a company called Sustainable Development Capital, as you heard, and I'm the person that really brings it to life, the connections between cities and climate finance. Before that, I worked for the New York City Mayor's Office under two different mayors, Michael Bloomberg, who has, I know, an extensive relationship to London, as well as Mayor de Blasio after that, in climate change. I was the climate diplomat for New York City for 6 years during the first Trump administration, actually. So this moment is familiar to me. I've worked extensively also with both of the colleagues to my right, and I really look forward to doing some more work in the city space here in finance.
Great. James.
Yeah, thank you, and good afternoon, everybody. My name is James Close. I'm the head of climate change at NatWest Group. Before that, I was director for climate change at the World Bank and a partner at EY. And I also have a small claim to fame here in as much as I wrote the chapter for the climate city called Financing the Climate City. So I think it's more of an academic publication than one that you get from Waterstones, but nevertheless a very good read. But NatWest Group, of course, is very committed to this agenda. We are very keen to get our money moving towards place-based decarbonisation. We've done a pretty good job on the renewables side of things. We're now doing more and more on the batteries, but we'd love to figure out how to support cities in making their cities better for their people and getting our capital to work, which is debt primarily, so relatively low cost of capital. And if for projects we can reduce the cost of capital, then the economics work a lot better.
Thanks, James. Really interesting. Mete, I'm going to start with you, if that's all right. You gave a great intro earlier this morning, spoke really passionately about how important this agenda is, not just for the city, but for people. Clearly London is doing a lot at the moment. You talked about the bus network you have and the collective approach pilot schemes, and you're looking at accelerated programs, etc. Can you go a little bit more deeper into what are the opportunities, what are the challenges, and what next? You talked about scale being a particular issue and knitting this together. And how do you do it to match the ambition you passionately talked about, making a difference for people, which I think this has got to be about people, it can't just be a money-making scheme. But with how are you in London going about really making it happen and accelerate that?
Yeah, I think there's a massive opportunity for us right now where for the first time you have a government who believes in climate change in the last 10 years, working together, not working against the Mayor of London, but also very formidable councils who are taking action across the city. Before I became Deputy Mayor of London for Environment, I used to be the cabinet member in Hackney. I used to be a councillor for a decade. I was elected at the age of 12, not really. But I was a councillor for 10 years in Hackney, and Hackney had one of the most ambitious green deals. There was £61 million in the last 3 years that was invested into much more greening projects across the whole borough. So I think there's a massive opportunity for us to really, where we've got alignment across all three layers of governance. And actually, this matters because the reason why that matters, and I'm sure Susan will sort of have very similar experience as well, is that often finding solutions to some of these big things that we're talking about is very complex, like retrofit, right? Like in the city of London, we have this really bizarre system where you used to have the social housing decarbonisation fund from government, all the councils basically have to bid against each other to unlock money from central government to be able to retrofit. And the problem with that is firstly you're creating this like bidding war between the councils and this competition that doesn't need to be there. So there's no strategic approach to retrofit across the city. The second problem is that most councils and most public sector organisations obviously been stripped for cash over the last 10, 15 years. And a lot of them don't even have the capacity to even think about what is the feasibility of their housing stock looks like in terms of retrofitting. How do you even retrofit? Where do you start? They don't even have the capacity to even bid for funding or to look at some of these finance models. And so what we've done from a London perspective, this is just one policy objective, is we set up Warmer Homes London working together with London councils, where essentially it's almost like a London office for retrofit, which we're leading a consortium bid for London, which we just found out that we have enough money to unlock up to 22,000 homes for the whole city to upgrade energy efficiency. This is just a first step. But what that does, it sends the right signals to the market, one in terms of scale. So we're looking at it much more strategically. In the long term, what we want is as part of the integrated settlement to have money for London on retrofit, so we can have, like in New York, Lolita, I had this really interesting conversation with the city recently where they were telling me that when they went out for procurement, they were saying, what can you deliver me for £60,000 on retrofit per unit, for example? We can't do that in London right now because of the way the money works and the way the budgets work. So I think, in the short term, we're able to sort of coordinate and drive much more money into to London. And that's just one area where, we can achieve real tangible benefits for our residents, because ultimately what that means is improving their livelihoods in terms of making sure they have cooler temperatures in the summer in the home, and obviously much more warmer temperatures in the winter when it's really cold. But at the same time, we're helping reduce their energy bills, and at the same time, it's helping deal with a very complex issue around climate change and obviously our environmental goals. So I think that's the bit where we need to find is how do you find the balance between needing to move fast, find scale, bringing communities with you, making the benefits of it tangible, and really giving people the agency of change.
Brilliant, thanks. Susan, tell me a little bit about the Glasgow story, because I know you've been at this for quite some time. You've been learning from other places as well. I was up in Glasgow a couple of weeks ago. I heard, we went around Govan Hill, really exciting things going on there. But just tell us and the audience a little about the journey you're on and the lessons you learn, opportunities and the barriers you're facing.
Yeah, so quite a few things in common with what Mete was saying, but I think from Glasgow's perspective, the real catalyst for us was hosting COP26, and that was the thing that made us realise that as a city we really didn't want just to be the place where COP26 happened to be, but that people would go away with a very strong sense of Glasgow, of our ambitions on climate action, and also the particular challenges that we face as a post-industrial city, probably Europe's more preeminent post-industrial city, with high levels of poverty, and particularly fuel poverty, particularly germane to this particular topic, I think, high levels of deep concentration of generational poverty and worklessness. So a number of challenges there, but also significant opportunity. And something about almost saying, if you can do it in Glasgow, you can do it anywhere, because our physical environment and the post-industrial legacy that we have is such that it is that kind of thing about necessity being the mother of invention. It drives innovation, and it drives finding solutions to those particular challenges. And so there was obviously a lot of discussion about finance at 3CI, and I certainly think, at COP26, and 3CI was launched at COP26, and I certainly felt that the particular focus on cities at COP26 really helped to bring a lot of energy to the discussion around finance and make it real. So it wasn't just at the kind of the high level of institutional investment and global financial institutions. It was talking about people's homes and how they're able to stay warm in their homes in an affordable way. It was talking about how we create places that are where people are able to live sustainably, but in a way that doesn't impact their livelihoods and their quality of life. So it was bringing it right down to street level, because cities and local governments are able to make that connection between the financial flows and the impact on place and people in a way that really no one else can, no other levels of government can. But it was also the case, I think it's fair to say, and definitely it was the case for me, that I was coming to this whole world of how we drive finance into climate finance into cities, really not knowing very much about that whole financial aspect and having to learn very, very quickly. Local government finance, by and large, doesn't deal in the kinds of sums that we're talking about for green infrastructure. London might be a bit different, just you have the scale that no one else has. So in Glasgow, we're doing quite a lot on our metropolitan level, which is 8 local authorities, a third of Scotland's population, more or less, still a fraction of London's, but that brings us the kind of scale that Mete's already talked about. But that's a scale that individual local authorities, by and large, are not dealing with. So what we've done in Glasgow is we've invested £4 million that we found ourselves into growing or indeed buying in the capacity and the knowledge and the skills that we need as a local authority to understand not just how we create investable propositions, how we make sure that commercial imperative is there, which investors need, and being very clear-eyed about that and understanding that we have to move into that space and understanding what investors need. I think also understanding, though, that it's not one-sided, that in actual fact we are bringing value as a local authority and as a public institution as well. We're bringing some long-term surety in those sort of longer-term investments, which is something that's of value to interested investors as well. So we've done a lot of work on that, and we're developing, and there are various stages of development, 3 particular financial models which we have either adapted or shamelessly stolen from, including London, colleagues who have gone out in front. So one is the net zero neighbourhood model, which CCI has pioneered, and which I know has been done in Camden and other places in London as well, where our demonstrator is a neighbourhood called Govan Hill. It's an incredibly vibrant, great neighbourhood in the city. Its housing stock is primarily pre-1919 sandstone tenements, which is a fantastic urban model of housing, but also appallingly energy inefficient. So we need to do both retrofit and energy transition and heat transition simultaneously, because if we just put people onto renewable source heat networks without also dealing with the energy efficiency of their buildings at the same time, we're actually going to drive them further into fuel poverty, and that's the last thing that we want. So that net zero neighbourhoods model is a place-based model, and it looks then at how you can balance out where you've got the more commercial opportunities with those longer term kind of risk heavier things that need to be done, like building retrofit, which is perhaps one of the more, if not the most challenging bit of the net zero jigsaw, if you like, in terms of delivery, just because the variety and the huge disparities among building types, whether it's the physical type or the ownership models or whatever it is, there's no one single solution for retrofitting across the UK. So that model allows us to try and balance that and have that place-based approach, bringing the community with us. We're also working to develop kind of Glasgow-fied versions of the Bristol Leap model, which is, I'm sure a lot of you will be familiar with, which is that delivery vehicle, whereby you're actually bringing in the expertise to deliver the work as well as the financing, and the London Edge investment vehicle as well as another one that we're looking at. So we've invested in capacity within our own staff group. In actual fact, my colleagues who are leading in this work happen to be sitting at the back of the room. But we're also buying in where need to be in quite a chunk of the money that we've invested as a council is actually to buy in external expertise and to help us get over those barriers and the challenges that we're coming up against. And they're exactly the same as pretty much every other city and every other municipal authority will come across. It's, how replicable are models that, or how not replicable are models that individual cities have developed? Are we at the stage of being able to take them off the shelf and just use them for your own city or your own area. Not yet is the answer, and that's what we're working on in Glasgow. There's those barriers around. Just the whole model of public sector procurement is not designed to enter into the kinds of collaborative long-term partnerships with investors and with technical experts that we're going to require to deliver this, and that requires quite a mindset shift and a culture shift within the public sector, because we're very, very conscious that we can't expect people to hang around, potential investors to hang around for 18 months while we jump through all the various kind of legislative hoops that we would ordinarily have to do, just to get some double yellow lines painted. That's not, we don't have time, the planet doesn't have time for public sector procurement models, frankly, so we need to address that and do that in partnership as much as possible. There is also the thing about being the first ones or among the first ones to go over the fence, if you like. There's always a bit of risk and a bit of danger in that, in that you're the ones who are making the mistakes and learning from the mistakes. My colleague Marvin Rees, the former Mayor of Bristol, who I know many of you will know, talks about the Bristol LEAP model having taken them 7 years and cost about £9 million. So in Glasgow, we are doing it in 2 years for £4 million. That's progress. Somebody else somewhere down the line they will have a model they can just take off the shelf, but we're not there yet. So it also needs that upfront investment from local authorities at a time when public finance is absolutely at a premium. And there is also that thing about, I think investors quite rightly are also looking for some upfront investment from the public sector to do some de-risking of some of the more challenging projects. So there's a whole number of things in there which we are still grappling with. We're working our way through. I'm confident that we will work our way through. Our aim is by the end of next year to be able to go to the markets with a model, with a vehicle that we can confidently go into partnership, knowing that we're not at the other end, we're not going to be able to not empty the bins, because that's the bottom line, is we still have to do that. We still have to provide all of those public services, and we can't take risks with those. So the progress is there, but we've all collectively still got a lot of work to do.
Thanks. Really fascinating hearing both the stories you're saying. So I heard alignment, capacity, challenges, procurement, local impact, partnership, two-sided partnerships, vehicles, models, etc. Lolita, give us a sense of what you've heard from Mete and Susan. Is that chiming with your view from the other side of the fence, if that makes sense?
Well, one thing I didn't say, and Mete is going to hit me for this, is that
I'm not going to hit you.
we are in partnership together. So my firm, SDCL, has a partnership with the Greater London Authority, where they place £50 million of their own treasury money, and our firm pays £50 million in a vehicle called London Edge. And that is for decarbonization projects throughout the boroughs of London, private and public sector, and university sector. So it can be any asset within the boroughs of London that needs to be decarbonized. And we are starting to deploy those funds now. It's very exciting.
So you're living and breathing the problems,
yes,
or the successes.
Yeah. Yes, and very proud of Glasgow for putting their own capital forward. And I often quote that. And having come from New York City, I also have that hat on as to the challenges that are afoot, even with a big city like that. One of the pithy things I came up with a couple of years ago is the 3 Ps are not public-private partnerships; they're policies, procurement, and planning. So those things actually need to be shortened and streamlined, and there's a couple of cautionary tales that I wanted to share about that. The first is that there's only 3 working offshore wind farms in the United States. The reason for that is that it takes about 7 years to get the permits. And what happened in 2023, there was a large project called Ocean Wind 1 and 2 off the coast of New Jersey. Ørsted walked away. £6 billion gone, or $6 billion, whatever the denomination was, because by the time that happened, COVID had happened, interest rates had changed, supply chains collapsed. They walked away from both of those projects. So now with the change in administration, it may be some time before we see some of those things coming to light. Another is a personal example that happened to me in Scotland. Sorry, anybody else who's in Scotland. I went up to an entity that shall remain unnamed about 2 years ago, and I said, wouldn't it be great to have the same charging stations when you're driving along the highways? Level 3 chargers, call one number, And the entity said to me, and I quote, "It'll take us 18 months to write the RFP." So I walked away, never talked about it again. So now people have to individually bid for Orkney, individually bid for other councils where it may be more challenging because they won't have the scale and they may get level 2, they may not get the service. So thinking creatively about how you change those processes. And one last example I'll give about that, there's an entity called Climate Mayors in the US, which is basically a number of US mayors that come together. They put together something called the EV Purchasing Initiative. So all these little cities needed EVs for their fleets. They decided to come together in that collective. They got much cheaper pricing. They were able to have entities that really wanted to work with them because it was a big enough contract at that point. So thinking through creative things like that to get around some of the strictures that are in place.
Brilliant. Thanks, Mr. James.
Yeah, first, I mean, the great things to hear about are, as you say, alignment, scale, impact. You know, all of these things are really relevant for bankers. And I'm not a banker by background, so I've spent the last 4 years, observing and watching the way bankers think about how they deploy their capital so that we can solve this problem together. And they're completely rational. They follow, like everybody else, a set of incentives. They have credit committees who look for backwards, by and large, in terms of track record that organisations that they're funding have had, rather than forward in terms of the potential that might happen. And they're also very keen on asset security because they want some recourse to get the money back. So when we look at these projects, that's what we have to convince our credit committees that they're going to get their money back. So we want to, and also we want to do this in a way that means that the relationship manager, the lender, isn't spending years and years tied up with the opportunity cost of his time doing something that's a relatively low likelihood of happening. And what we've seen work is things that the credit committees understand, like battery storage, and particularly utility scale battery storage. And I was quite surprised about that because there's a lot of technology risk associated with that, but the income streams are very clear and the counterparties are plugged into the grid and the legislation and policy works really, really well. And once one of those has gone through credit, of course, they want to do loads of them because you don't want a single counterparty risk, you want a portfolio risk that you can carry. So once we can prove the concept and get a scalable proposition, banks will want to do many of these. And then the money's really flowing. And the banks, as I said earlier, have low costs of capital, which means the cost of capital reduces, sits alongside some of the equity finance, which is a bit more expensive but more risk-bearing. And then you've got a capital structure that really works and brings the economics into line. The things that we find really difficult, or the bankers find really difficult, is when they don't understand the revenue model and they don't really understand where the counterparties lie and who's ultimately going to have recourse for it. So electric vehicle charging infrastructure, a really, really good one. Now, I thought this would be brilliant because you've got an underlying asset. But the problem is the payment mechanism and the uptake of the infrastructure is unclear. So it becomes much, much less bankable. But that's where I think we can work together to figure out how to structure these projects, make them much more standardized, and then scale them up. And I think also the other thing that I've learned about banking is when one bank does it, others will almost inevitably follow.
Right.
So
tipping point.
Yeah, because we're all effectively syndicating the same money. Yeah. Our funders, which are the big asset owners, give us, they invest in our bonds. We've obviously got our equity as well, which is roughly the same as the other banks. So that can all come together as well.
And do you feel the sector's coming near to that point?
Well, we've done some brilliant work with 3CI around place-based decarbonisation. We've got people into the room, and there's this huge sort of enthusiasm for doing these kind of deals. 3CI has come up with this really great pipeline that we're now starting to interrogate to look at which ones we think are going to be the most creditworthy, and therefore put the effort in to converting them. And what you're doing, Susan, in Glasgow is really exciting. Mete, in some ways, you're a bit further ahead in some of the things that you've done in London as well. But once we can kind of turn those into standardized projects and approaches, then the money will flow, and we'll see the benefit coming to the people who live in those communities. And that's what I think is
Yeah.
because these are also our customers as well, and we can show that we as an organisation are helping all our 19 million customers have better lives and livelihoods.
Great. Look, I've seen horrendously, there are only 3 minutes left of our session. Where did that go? A question from the audience here, and just thoughts, perhaps one from the private sector, one from local government. Doug West asks, what is your view on how legislation can incentivise change? What kind of legislation would you like to see in this space? Lolita, do you want to?
I actually have a live example. So I'm looking at some of the C40 people in the room. We have something called Local Law 97 in New York, which was world-leading legislation, where we actually put together a law in 2019 that starts this year, where any building with some carve-outs and exceptions over 25,000 square feet has to decarbonize by 30% from a benchmark, because we have benchmarking our buildings for many years, or they get fined, and they get fined every year. So needless to say, there was a lot of fights about this. Some people I know got fired from some of the real estate entities that were trying to lobby against it. But the point is that's in place now, and many of the entities actually who fought it recognize now they're going to get higher rents. They're actually getting a lot more efficiency and money back in a lot of ways. But that's something that New York did, and other cities around the world are looking at that model.
So that's legislation driven. So it
Yes.
took quite a lot of guts to do that.
Yes.
Anything, Mete or Susan, you'd like to see, either something you can do, was challenging, or you'd like to see government or that alignment you talked about to be putting in place in terms of legislation?
Yeah, I think there is something around that, not forcing people to, but removing the options for people on something like making sure that your building is energy efficient. I think particularly for larger scale landlords, private rented landlords, for example, who are not living in their buildings, so maybe don't have the day-to-day motivation around fuel bills, for example, or comfort. Impetus that it can only really come from legislation or from regulatory frameworks, I think is then incredibly helpful for local authorities who are trying to take entire places rather than it being piecemeal, which is just going to drive inequity and make things more challenging for people who are not able to afford to do it themselves.
Is there anything you'd like to see?
On legislation, I think there's a lot of conversation being had around planning right now. I think we need to, where you've got very ambitious targets, I think we need to massively accelerate some of the stumbling blocks that the reach of, like the very localized projects or the individual cases where it's just, we're not going to reach anywhere near net zero by 2025. Yeah, it's just exactly. And I think there's a big mismatch between, the sort of the ambitions that most, the political and governance administrations have, sort of like some of our panels, and obviously it's positive to see that the new government's obviously taking steps to look at how we can make sure that we streamline and make things much more quicker, because ultimately that then has an impact on what we do in London and what that actually looks and feels like in communities. Yeah.
Look, I'm afraid we've only scratched the surface today, which is what we're saying. I'm a big sign saying stop.
We got it.
So, can you all put your hands together and say thank you for our panel today?